open up in the red.
Rajat Bhattacharya, Senior Investment Strategist at Standard Chartered, is joining us right now to take some questions. Rajat, great to have you with us here. Thank you very much. So we had this very large move on Thursday, follow through on Friday. Is there more to go in US equities, or do you think the rally could be punctured with all of the Fed speakers who will come out and say one thing or the other? Your sense?
Hi, Prashant. Yes, as you've signaled there, 2 to 3 sigma moves, last week, and those are, as that by definition is a huge move. So some kind of a consolidation is in order, and to your point, a lot of Fed speakers are lined up. We've already heard from some of them over the weekend. They're all cautioning against that. This is not the pause in Fed rates, right? So this is a slowing down, which Chair Powell signaled to us in the last meeting, that he's actually seeing a possibility of a slowdown in the rate hikes. So what we're really looking at is a 50 basis points rate hike in December, and then we will see. It's going to be data-driven point, So there are 2 more data points to come through before that December Fed meeting. So one is the non-farm payrolls at the end of this month, and then you have the CPI for November. So those 2 again will show how far we have progressed. The jobs data is still very hot. The job market is very hot in the US. But CPI, as you mentioned, slight slowdown coming through in the inflation. But mind you, we're still talking about, if you take month on month, is 0.3%, which is well above the Fed's 2% target. But there's a likelihood that the inflation has peaked, and that is helpful. We need to watch some more on that.
Okay, so 50 basis points rate hike is what you're expecting from the Fed in December. Got that. Rajat, good morning. Are you getting a sense that the worst of the rate hiking cycle is now behind us because of the reasons you referred to, whether it's cooling off of inflation or, growth continuing to pick up? And if yes, how do you approach risky assets like equities, especially emerging markets like India?
Yes, Sonia, I think we're closer to that peak, right? So now the Fed terminal rate, which is the one we keep watching, the terminal rate where the Fed is likely to end this cycle in rate hikes, that has now come off to 5%. It used to be 5.25% before the last CPI print. Now, if you take 5%, and if you're factoring in another 50 basis points of rate hikes in December, that would take us to 4.5% by the end of this year. And if the terminal rate is 5%, you've that much little more to go. So we are close to that peak of rate expectations. But as I said, the inflation is going to be key from here. The broader underlying CPI, the core inflation, is still pretty solid. If you take out the extremes, we're still talking about 7% year on year or in terms of the overall index, and almost 6% core CPI. If you take out the extremized data points, so which means that this will be a deciding factor. But how do we position for that? In the next few weeks, you're probably going to see the possible continuation of this rally that we're seeing in risk assets, especially you mentioned growth stocks, which were battered down by high rates. But over the longer term, I think the way to position is, again, the emerging markets, Asia ex Japan stocks are really appealing. I've mentioned in this forum time and again how beaten down Asia ex Japan stocks were. China, for instance, we've seen the run up. China stocks were up almost 18-20% last week. And that's for a reason, because they were so beaten down, nobody was owning it. This is one market. It reminds me of that famous phrase that the financial markets, the stock market, is one place where assets go on sale and nobody turns up. And this was the market that was waiting to be bought. A slight turn, and now you see more. Over the weekend, we've seen China ease further policies towards real estate, and that should help as well.
Yeah, that's right, Rajat. And some of those stocks, they're flying away. The real estate stocks, 30, 40, 50% as well higher. I'm just looking at a couple of those mainland developers out there. Country Garden is up 50% as we speak. Rajat, but, just stepping aside from this argument about emerging versus DMs, etc., I wanted to ask you about the cryptocurrency market. That's having a Lehman moment out there, or worse than that. We haven't seen any kind of rub-off on the equity markets. Do you think that that is unlikely to happen? Because at one point of time, no guts, no glory. But now it's turned around. What's your take?
Yeah, we've always been very cautious on the crypto market per se. The crypto idea is going to be long-lasting, but those things like Bitcoin, and we've been always cautious. So we haven't really seen so far the spillover into this market, but we have to watch the exposure of various agents. So far, I don't think there's going to be a huge spillover. But we need to watch this space. We don't know what's lurking there because of the nature of the crypto currencies themselves, right? So they don't have the financial exposure, so to speak. They were alt financial market, so to speak. So it's very opaque, and we need to watch that space.
Okay, well, Rajat, thanks a lot for joining in and giving us your quick thoughts on CNBC TV18. We appreciate it. That's the word coming in from the global expert. There's a 50 basis points rate hike in December that could come from the US Fed. And it's perhaps a slowdown in the pace of rate hikes, but not a pause for sure. Let's slip into a quick break on that note. On the other side, our entire research team will be with us to give us all the stocks to watch out for in trade this morning. Stay tuned.